Moving ahead with our panel 1 discussion, topic on GIFT AIFs unlocking inbound and outbound investment potential. Now I invite our moderator for the session, Mr. Tejas Desai, co-chair PE&VC committee, Bombay Chamber and partner E&Y, and our panelist, Mr. Pavan Shah, general manager IFSCA, Mr. Mitul Mehta, CFO Blume Venture, Mrs. Lakshmi Iyer, CEO of Investment and Strategy of Kotak Alternative Asset Managers Limited, Mr. Clarence Anthony, Managing Partner, Clarence and Partner, and Mr. Niutpol Handique, AVP International Business Development Manager, Mirae AMC. Over to you, Mr. Desai.
A very good morning to all of you present here, and good morning to all my fellow panelists as well. Thank you to Sandeep Khosla, to Ashit Kampani, and to Swati for setting the context for this session. Just a few things, I want to sort of lay the context for this discussion, before we go into, do a deep dive, right? I think, and like, Swati rightly mentioned, the establishment, of the concept of GIFT City, I think is a defining moment in, India's reform agenda. I think when we look back, 10, 20 years, from now, we will realize, how big this concept is, right? And of course, the creation of IFSCA also is a momentous occasion. I think Swati delved a lot into that, so I won't go into it. She's stolen some of my words, but there's no doubt in anybody's mind that what the IFSCA has done over the years, over the last 5 years, has been truly transformational, and it's one of the reasons why we are all sitting here today and having this panel discussion. What we are going to talk about is AIFs and the entire ecosystem around fund management in GIFT City, and I just wanted to share some data points around that, right? So I think the regulations are of course truly transformational, and when I deal with a lot of our clients, I think the conversation invariably, and especially foreign clients, is how do you access India, right? And it's now a three-way conversation, right? So you could access India directly from offshore. You have your traditional FPI and the FDI routes to access India. You could set up something onshore, it could be a domestic AIF, it could be any other legal form of entity. And the third way is, can I access India through GIFT? And I think that is becoming so very crucial in all conversations that it is becoming impossible to ignore GIFT City as a route to access India. It may not be for everybody. I'm not saying that it works in 100% of the cases, but there is, I think, no situation where you do not analyze access via GIFT City. You make your decision, but you have to have GIFT City in the mix of your analysis. So I think that is the state that we've got to in 5 years' time, where it is become impossible to ignore access into India via GIFT City. And I think I would only say that we should consider ourselves fortunate that GIFT City has come in during our career span for us to be able to make so much out of it, talk to clients, and boost business access into India. And the whole IFSC regime has seen a lot of rapid progress across the various subsectors, right? But I think the fund management piece is the one which has, I think, made a lot of progress as compared to a lot of the other subsectors within the GIFT City. And just to share some statistics, there are 140 fund manager entities today in GIFT City, about 200 schemes launched by those 140 managers. Cat 3 is about 160, Cat 1 and 2 is 70, and the rest is the PE&VC schemes. The total commitment that is raised in GIFT City is about $14 billion. The total amount deployed via GIFT City funds is $6 billion. And a wide bouquet of investment offerings which meet the appetite of global investors is something which flows today through the GIFT City. And I think the confidence in this jurisdiction and the regulatory architecture is, I think, best demonstrated by the fact that there are about 2,500 unique investors which come into GIFT City funds, and they come from more than 50 countries. I think there cannot be a better demonstration of how successful GIFT City has been so far. So I think that sort of, I just want to give that background. This is where we've reached in 5 years. Of course, the road ahead is a long one, and more needs to be done. And therefore, we have this esteemed panel here, to talk through, what their journey has been, as asset managers, as service providers, and I've got a diversity in the panel, not only in terms of male female ratio, but more about their capabilities and what they represent, right? And very quickly, first and foremost, to my left, Pavan, Shah, General Manager, IFSCA. Thank you very much for agreeing to come here and to be a part of this panel. Mitul, Mehta, CFO at Blume Ventures, a VC fund. Lakshmi, Iyer, CEO at Kotak Alternatives. Clarence Anthony, Managing Partner at Clarence and Partners. And Niutpol, Handique from Mirae Asset Management. So we've got diversity, we've got public markets, we've got private equity, we've got VC, we've got lawyer, and we've got the regulator. I don't think we could have asked for a better panel than this. So let me maybe open up this discussion, and maybe I'll start with you, Lakshmi. As Kotak, of course, is India's leading alternative assets company, rich 20-year legacy. You manage multiple funds, across asset classes, across the investment spectrum. What we would like to know from you is bit about yourself and your role, and how did as you grew over the period of 20 years, right? GIFT City came somewhere along the way, right? And how did it fit into your strategic priorities, and what was that journey? If you could, give us a insight into that.
Hi, morning everyone. Yes, we are truly diversified in terms of the areas that we cover, specifically from the investment standpoint, and I think the entire ecosystem is available on one platter for all of you all. So in terms of, I've been with the firm, the Kotak Group now for, it's my silver wedding year, I must say. Because I got married to Kotak before I got married to my spouse. And all along, I was actually on the public market side with, Kotak AMC before I moved to Kotak Alternates about 3 years back. Of course, Kotak AMC has been in existence for 25 years. Kotak Alternates has been in the business for about over 2 decades, predominantly in the private space. About 4 years back, also made its foray into the Cat 3 or the listed space. But the underlying commonality between both the categories is that the GIFT City is the overarching, I would say, bonding factor for both these category of investment offerings, because that seems to be the need also, not only from an asset management perspective, but also from an investor perspective. I would say from a journey perspective, the initial structures were in Mauritius, Singapore, Cayman, and Swati did allude to it. And clearly from that perspective, inward looking and being more Swades, I think that's been the journey that we have traversed. It does make a lot of sense because, I think Swati has elaborated quite a bit, and she's given a good landing for this, panel to kickstart. But you look at from every perspective, proximity, yes, it's, and this is even without the bullet train, there is amazing proximity even right now, whether you talk about the tax holiday, whether you talk about the dividend, being tax-free for the investor. I think from all of those perspectives, and I think you know enough about it, it just kind of gives you a three-dimensional reason to have your setup there. So I think, it's maybe if we would have had this, discussion a couple of years back, we had no presence, no fun. Today, I'm happy to say that this journey has consummated into having 12 funds for us out there, $1.4 billion invested, and about $3.5 billion of commitments.
Fantastic, fantastic. I was wondering whether you would be willing to share the numbers, but I'm glad you did. It's 12 funds, $1.4 billion. I don't think there is a better sort of advertisement for GIFT City than what you just said. Mitul, coming to you and completely different strategy, right? Blume Ventures again has had a very exciting journey. I guess you are right now at your Fund 4 or Fund 5?
Yeah, Fund 4 deployment.
Fund 4 deployment, established about 15 years ago, and moving from early stage, pre-seed now to almost Series A, at this stage. So again, Mitul, talk us through your journey and why did you think GIFT City made sense for you, and at what time did it make sense for you? Because I want the audience to understand. Everybody has a concept of GIFT City in mind, but when they hear from you, we would like to know what were the real drivers and what prompted you to move to GIFT City.
Sure. So some numbers before that, because it will help in context. So we are in our fourth fund now, in process of raising our fifth fund. Fund 1, 2011 was a small 100 crore fund. That's when Sanjay and Karthik started off and Ashish joined in. Fund 2, $60 million. Fund 3, 102. Fund 4 eventually came to $290 million. And we're probably looking at another Fund 5 of about 250, 300 sorts. Now, the reason for these numbers is we always had a decent set of offshore investors who were always invested in the whole VC strategy in India. So that was always there from the beginning, and until GIFT City, the alternates we had were Mauritius, Singapore, etc. Right? So we did have a setup in Mauritius earlier, but it was never there for the tax benefit that Mauritius gave. We were very, very clear that was never the reason. The only reason we had set up there was because there were investors who were not too keen to come into India direct. They still wanted to pool money abroad, and that was significant enough for us to have a base abroad. Right? But the moment this came up, in fact, even before that, when the tax treaty changed between India and Mauritius, the first thing we did was unified our entire structure, because tax benefit was never the reason to set up there. So we said, let's not try and get into that at all. Let's ensure we're following the substance test. And as soon as GIFT City came, we were in process of starting our Fund 4. We were a little apprehensive because this is back in 2021 when a lot of things were still shaping up. We were just coming out of COVID. But we were very clear internally that that seems to be the way to go. And we set up anyways. I think we were one of the first few VCs who set up in GIFT City. And I think it's primarily that. I think it allows us to pool our global money. And the interesting part was in Fund 4, it still needed a little bit of convincing to people that, what is GIFT City? They kept asking questions, kept, things like, what will the tax authorities look at this as? What will regulators kind of be like, etc., etc. So there are a lot of questions there. In Fund 5, somehow, we did 100 million of our 290 million, 102 million was in GIFT City. In Fund 5, we're looking at about $200 million in GIFT City. But there are absolutely no questions this time. So I think that itself has been a kind of a point for us, that we have a lot of sovereign funds, we have DFIs, even including those people who are very sophisticated. This time we've not had a single conversation around why GIFT City. So that's been an advantage for us. And we've also realized that, with the way the regulator is approaching it, with the way the markets are going, it clearly becomes a very, very easy alternate for us. And like Lakshmi covered, right, proximity, etc. There were various reasons of those kind as well, where that got us to think about GIFT City.
No, I think that's fantastic. And I've of course advised clients over the last 20 years, and I've seen this space evolve. Right, earlier, when you wanted to raise private capital, and private capital was only available offshore. There was no domestic private capital at that point in time. And what were your options? Your options were to go to either Mauritius, largely Mauritius, and then Singapore came along the way. But that's the only place where you could pool money. And then of course you had to do all sorts of tax structuring, because the team was sitting in India, the fund is offshore, so how do you manage your tax risks, right? And then somewhere AIF came in 2012, and then you started to see unified structures, which is what Mitul is referring to. And then 2020, and then we had GIFT City. So I think this whole evolution journey has been fantastic for asset managers, and it has evolved in a particular way. And I think GIFT City sort of filled that need or that gap very well, where you needed to, or you didn't feel the need to stay in Mauritius now. And I think what Mitul is saying is very important, how LP conversations have evolved, right, from trying to convince them to understand what GIFT City is and come into GIFT City, from saying in Fund 5 there was no need for those conversations. I think that is the trajectory where GIFT City is headed, and that I think is very, very crucial. Thanks for sharing that, Mitul. Niutpol, moving to you, and I think one question that I get asked in a lot of client conversations is that how many foreign fund managers are there in GIFT City, because
Correct.
a lot of people think that GIFT City is all about Indian asset managers, and it's their familiarity which brings them to GIFT City, but the foreigners are not coming to GIFT City. So I think no better advertisement than Mirae asset for GIFT City as a foreign asset manager. Niutpol, talk through your
Sure,
journey
sure.
and what
Hello,
prompted
everyone.
you to
Thank
come to
you,
GIFT
Tejas.
City.
I think that's a beautiful question, and I think I have been engaged with GIFT City since my earlier organization, and fortunately, both of them are foreign managers. The earlier, company which I worked was Nippon, and it's Mirae. So in both the organizations, actually, I've been working for the GIFT City part, and I have been engaging with Pavanji and team. We have been bugging them with a lot of questions, and they have been very kind enough to entertain us every time we go. So thank you so much. And that has actually helped us in gaining, clarity as to how the ecosystem is, and that has helped us in, structuring the funds in GIFT City. Today, you see the funds which we have launched in GIFT City are very unique. We have two funds today. First, let me cover, from a foreign manager's perspective. Mirae is one of the fastest growing, global AMCs in Asia. In the last 25 years, we have grown from, 30 million to 600 billion today. And we are present across 15 countries. And India is one of the crucial juncture where, the focus of the management where we want to expand our business. And there can be no other place than GIFT City, because in the domestic space, the mutual funds, you already have a lot of schemes, a lot of, variations out there. But GIFT City is a purely, clean slate where you can try different, strategies, where you can try different funds. And that's what prompted us to, come into GIFT City and start our fund. We started our journey in 2023 where we set up our office in GIFT City. And within 1 year, we launched our first fund, which is an inbound fund, essentially for NRIs and foreign nationals, where we pull in money and we invest in domestic mutual fund. And we were one of the first fund or AMC, not only as a foreign AMC, as domestic AMCs also, to come and launch a fund in GIFT City. Initially, we had to educate the people, as all the speakers have already said. But thanks to the market participants, also the regulator, we have been doing a lot of road shows, we have been doing a lot of webinars, we have been a lot of events where everyone has been speaking about GIFT City. And today, as Mitul rightly said, you don't need to actually explain what GIFT City is. Day before yesterday, where I was in Chennai and addressing a couple of people, and I actually asked them, do you want me to take you through the GIFT City part? They said, no, we know all about GIFT City, tell me about your fund. So that's the kind of response which we are getting right
Absolutely.
now. So overall, for us, GIFT City is a very important, jurisdiction where we want to expand our business. We already have launched 2 funds. I mean, last week we launched our first outbound fund, and there are a lot more to come.
Sure. I'll come back to you. I have some questions on what products you launch and what prompted you to do that. But let me come to Pavan. And Pavan, I know you've worked tirelessly over the last 3 years to bring the ecosystem to where it is. We've all troubled Pavan immensely. Whenever we've got stuck somewhere, and he's been so helpful to all of us. I have 2 questions. One is how do you see the situation today? Glass half full, half empty. That's question number 1. And secondly, the new fund management regulations, have been released a few weeks back after a gap of 3 years. What was the thought process behind this? What feedback did you get from stakeholders, and what are some of the highlights of the regulations? If you can delve into that.
Sure. Thank you, Tejas, and I must compliment you for getting the panel. So we have got one of the first VC out of GIFT. We have got one of the largest fund manager out of GIFT, and we have also got the first foreign AMC which had set up in GIFT on the same panel as well. So compliments to you. And since yes, of course. And since all of you started with some numbers, let me also share some of those numbers, and probably the numbers which you mentioned, Swati mentioned, just to highlight what all numbers they mentioned have been right. And if you would have heard it right, then there were a difference in numbers. What Swati mentioned was 2 months old. What he mentioned was a month old. I'll tell you the latest numbers now. So yes, investments were about $6 billion. As we speak, it's about $8 billion.
Wow.
A year back, it was just $1 billion. 6 months back, it was about $4-5 billion. That's how our journey in terms of investments into India and other geographies has been. 6 months back, I said a number of investors, 2,000 from 50 jurisdictions. 2,500 was again 3 months back. Latest number, we have crossed 3,000 investors in GIFT.
That's the advantage of having the regulator on the panel.
And why I am laying out some of these numbers is just to set the context, the pace at which the jurisdiction is growing. The numbers which you may hear today will quickly change the next day. And while, again, if we look at the number of investors, 3,000 standalone, if you look at the number, it may not sound great or a large number. But mind it that these are only large institutional investors or very sophisticated HNIs and not the retail investors. These are all the investors who are cutting checks for probably $1 million or probably even larger checks. So these are not smaller people, and it's not that they are coming from 1 or 2 jurisdictions. Earlier, people used to have those apprehensions as in whether people will be comfortable with GIFT, not, what would be the investor's thought process. So yes, all of those thought process we have as in walked past that stage as well. Separately, what is more pleasing is more than the numbers. Let's look at what some of them have actually done on ground. So we have seen one sports fund set up in GIFT, which is pulling money from foreign investors, investing in new generation sports tech startups in India. They want to redefine what all can be done through sports. We have seen a lot of real estate infrastructure funds. We have seen a sovereign wealth fund setting up their first proprietary fund outside of their home jurisdiction in GIFT. Talking about foreign asset managers, let me give you a altogether different example. Suzuki, a Japanese company, they have set up their own proprietary fund in GIFT, and this is the first impact fund out of GIFT. They want to make those investments which can probably have a ground level impact for the country like India as well. So these are some of the real impact towards which GIFT has contributed probably in last 3 years. And just in terms of our journey, so one good thing was, as in just to give a background, many of you know my background as well. So yes, I was with SEBI before joining IFSCA. For a decade, we tried to stop what all you wanted to do. And now in last 3-4 years, we are trying to do a lot of things which you always wanted to have. So that has been personally my journey at IFSCA. And if you look at our first couple of years actually, and all these numbers are essentially is about last 12 or 18 months when actually the entire ecosystem has come in order. So what we identified in first 1 year and 18 months was what all we should be doing it for the next few years to make this jurisdiction as a growing as an ecosystem of fund management. And we looked at several jurisdictions. What are the right things to do? Definitely ease of doing business and cost of doing business, first two things which were always there, and these are not lip service but actually on ground, as in some of them can speak about the ease of with which there are certain difficulties, but still a lot of things over a period of time we have been able to ease out. Cost in any case in India, I need not elaborate. The third piece again on taxation, while as a regulator we are very clear that we don't want to compete on taxation, at the same point of time we have been very practical to understand that people will not move from different jurisdictions unless there is at least tax parity. So we have worked very closely with CBDT, DOR, and at most places we have got a parity or a preferential treatment. What is more important, what we could also get through is more certainty for market participants. So when I meet any of them, probably they'll say we are ready to pay a percent more. As in we don't, it's not that we will run away for 1 or 2%. What is more important, we don't want to see any tax notice. We would want a greater certainty. So the entire tax treatment for gift funds, we have got it hard coded under the Income Tax Act. So that's the certainty which we thought was important for the industry. The fourth piece is ecosystem. Somebody mentioned, and this was again during our first 18 months of journey, we realized if we want to have a thriving ecosystem, we need to have the law firms, the tax consultants, the fund administrators, the trusteeship companies, the custodians, foreign banks, all being set up in GIFT. And today, as in very proud to say, all of these services are available within GIFT ecosystem. And if you ask any of them, most of these services, they are availing out of GIFT City itself. So that has been quite satisfying. Of course, there have been certain areas where we would have liked to see faster progress, probably. Nonetheless, being cognizant of some of those areas, client onboarding, Swati mentioned about it briefly. We had a conversation around it today morning. It's something we are working with DOR to get. In any case, for GIFT, there is a differential treatment. There is some ease which is already in place. We want some more when we compare it with international jurisdictions. Retail scheme and ETF, which will bring in a lot of investors, a lot of investments as well. We did not have a tax treatment. It's only now we have got a tax treatment. This year, internally, we feel this will be the year for a lot of retail schemes being set up in IFSC. Just to answer your second question in terms of our changes in the regulations after 3 years. Very proud to share that we are the first financial sector regulator in India to have a regulation for us which binds us how to make regulations. So one fine day, I cannot change anything under our regulations. There is a process which we have to follow whenever we want to change any of our regulations. That regulation mandates us to revisit each of our regulations every 3 years. While we wanted to give a lot of certainty to market participants, we didn't change our regulations for 3 years. 3 years, in any case, was a good time period to see how things have evolved over a period of time. There were certain areas where we felt market participants had rightfully represented for some more ease of doing business proposals were there. So we kind of probably acknowledged some of those suggestions and tried to implement those. Then there were about 10% clarificatory, 80% of the proposals were towards ease of doing business. 10% were clarificatory in nature, the intent was there. Probably in language, some amount of ambiguity was there, which we tried to resolve. And the last piece, 5-10% proposals were towards these safeguard measures as well. I'm sure most of you would also agree, whatever we do, at the end of the day, if investors' trust and interest has to be there, then you will continue to do a lot of good business out of GIFT City. Even towards that, we started supervision last year. Some of these safeguard measures which were felt appropriate were introduced in the next set of regulations.
No, fantastic. Thanks, Pavan, for giving that entire landscape. And I think, some of these points obviously resonate, with me when I have client conversation, right? Like change in regulation. Now, of course, we are an emerging market, things are dynamic and therefore regulations are subject to change. But, as far as foreign investors are concerned, sometimes they think that, there is too much of change happening. The pace of change is just too much, for them to digest and then to adjust to, those changes. And, everybody talks about the Friday evening circulars and how it comes every Friday and you have to be ready with your response on Monday. So this is very refreshing, what Pavan is saying, that, they don't need to make changes, all the time. It will be revisited, periodically, and then the changes will come, and I think that is really refreshing. So thanks for sharing that. And of course, tax certainty, the point that you mentioned is absolutely critical. Foreign investors do not mind paying tax as long as it is clear what is the amount of tax that is to be paid. They don't like notices coming 3 years later, 5 years later. That is just a no-go as far as any investment is concerned. That brings me to Clarence, and taking off from what Pavan said on the regulation, right? Clarence, you advise a lot of clients on setting up gift city structures. You work on their documentation. Let me start by asking you, how do you see the IFSCA fund management regulations? And I'm sure you've done a lot of work on the SEBI AIF side as well. How do you compare the two regulations? What are the good things, bad things, about that?
I think I'm not going to get drawn into a conversation of comparing the two. That's dangerous territory. I think I can speak from the perspective of both clients who've come to us and debated whether or not to set up in India or to set up in GIFT. And one of the sort of hallmarks of why they want to do GIFT is the flexibility within the regulation. I think we've seen, at least over the last year, some amount of tightening around the AIF regulations, which frankly isn't there in the GIFT regulations, which allows some more flexibility, especially around side letter rights, certain investor protections, liquidity waterfalls and so on, which frankly a lot of the the DFIs, the significant strategic investors looking at these sorts of funds really want. I think co-investment is another space where we have seen a lot of appetite to focus first on a gift city fund and then potentially use master fund in India under the AIF. But we are seeing a lot of fund managers say, we'll set up the parent fund in GIFT, pool capital over there, give the necessary rights that we need to our investors there. If we need to use a domestic AIF, of course, because of FEMA considerations and so on, we'll do that separately. And also if you need to pool domestic capital. But there is a clear preference to now have the gift fund for the purpose of pooling, especially overseas capital. I think we have also seen, there are other benefits, I think, from perspective of sort of regulation, right? Including with respect to having personnel located there, yes. That is one of the things that's required for the purposes of GIFT. But at the same time, certifications, requirements and so on, which have sort of been a bit of a challenge within the AIF regime, aren't really that much of a challenge within GIFT. So we've seen that be another reason why people look at GIFT. Now, the question has also been, well, why GIFT and why not continue with overseas funds? And yes, that debate does continue, in all honesty. Though there is significantly, at least from our perspective, significantly more appetite for actually using the GIFT structure, also because of the tax exemptions, also because of the relative, the improvement and the greater level of certainty within the regulation, and sort of the greater appetite of the government to promote GIFT funds. And I think especially fund managers looking at long-term exposure in India are certainly looking at GIFT as the place to be. At least that's our experience of GIFT.
Well, thanks for that, and I quite agree with what Clarence is saying, and we advise a lot of clients today, on foreign money coming directly into a domestic AIF or via gift structure, and I think some of these changes in regulations become or differences in regulations become important decision points, right? So for a category 2 fund, for instance, you can take leverage if
Yeah.
you are a gift city fund. You can't if you are a domestic fund, right? Placing of people and what is their criteria. Simple things like giving exams is something which tends to be a pain point, right? At the same time, in gift, and I will not mince words, but people do say, okay, will I really find the talent to locate people in gift city? So these are some of the areas of distinction, and you got to strike a fine balance in making a decision in terms of where you want to
Yeah.
locate funds. So
And I think
thanks for
one
that.
other
Yeah.
thing I would say that if there's an opportunity to push for more preferential treatment for gift funds, especially on the FEMA side, right, on the inbound side as opposed to the outbound side, I think there is a lot more opportunity to really leverage the fund space. And I'm talking about, for instance, really being able to get straight through licenses on FVCI, for instance. That would be a very strong driver for especially infrastructure focused funds, infrastructure platform focused funds also to be in gift. And there are many of these sorts of things that it does make sense if we could get uh, more regulatory certainty, not just from the IFSCA, of course, that has happened, but on the other regulations, especially exchange control.
Sure. And then talking of exchange control, maybe my question to Mitul, we all know for domestic AIFs to invest overseas, it's subject to an overall limit, under the FEMA guidelines, and you know, GIFT obviously tends to solve that problem. Is that one of the drivers for you, Mitul? When you considered GIFT, the ability to invest in offshore portfolio companies?
So, at least in Fund 4, this was not a big challenge when we started off. So, at that point, we had a full feeder fund in GIFT and master fund in India, because all LPs would typically want the same exposure to portfolio, right? So, it was never sold as a differential portfolio exposure. So, at that point, this limit was still available, applications were still going through. But the moment we hit 2022, I think some of our applications got stuck for about 15, 16 months, right? And that's losing the investment, right? Which is especially in today's day and age where companies may be focused in India, but still, let's say, have AI as a base, or SaaS earlier as a base, or deep tech. They would still want holding companies based in the US for various reasons. Some is talent availability, technology, the ease of convincing investors there on businesses of this kind. So there were various reasons where we lost out a few opportunities. And which is why the shift in Fund 5 is that the way we are thinking of it is, this will not be a full feeder. We will be investing or making outbound investments from GIFT City Direct, which means naturally that our India investors may not get exposure to those companies, but that's something that we essentially had to do. And yes, you're right in that sense that GIFT allows us to do that, right? I think the only thing that we can't do because of our kind of fund is get our resident investors to invest in GIFT and then outbound, because we have a lot of India portfolio as well. So we're kind of splitting it that way and doing it in this fund at least.
Understood. Thanks for that, Mitul. I want to move a little bit into products and strategies of the fund, and maybe a question for you. Lakshmi. Of course, you would have seen a lot of institutional money invested into India via GIFT City funds. Where do you think we are headed, and what new products or strategies one can look at? Do you think retail funds is something that Kotak would be interested in, or the market would generally be interested in? What do you think of the NRI, 100% NRI focused fund? Is that something, which you think is a game changer? How do you see, your road ahead in terms of, new strategies and new products?
So again, two parts to your question. One is today we are getting the institutional base getting familiarized with GIFT. Again, if I talk about 2 years back, 3 years back, it was very utopian, and Singapore was still the favorite, I would say from every perspective favorite, and it's very difficult to part away with favorites, whether it's your clothing or your fragrance or your jurisdiction, is very difficult. From there on, I think we've traversed a reasonable journey. Today, when we have conversations with our LPs, GIFT doesn't need an introduction. I think that is something which we've established. Can we get better? Obviously, I would say we are pre-intermission phase. I don't know what Pavan's view is, but definitely we can do much more. In that, I would say retail brings in volume, and volume brings liquidity. Whereas institutions bring in the value. I think that is the big demarcation. So I think we are getting to there. Second part to your question is that the products. I would say that earlier, if you wanted to have access to some of these exotics, you had to necessarily look outward, which is offshore. And today, all of those facilities and all of those launches, including ETFs, for example, can happen in the GIFT jurisdiction. So I think that is something which we clearly believe is a big, big, big positive. I don't know whether I should call NRI Focus Fund as a game changer. I don't know if that will be a game changer, but certainly we are taking baby steps to get towards making broad-based access. Number one. Second is, as I said, introduce innovation. And today the crux or the focus of pretty much every asset manager is to रुमाल डालने वाली बात जो होती है कि रुमाल डालो, सो गिफ्ट में पहले रुमाल डाल दो. इट इज़ लाइक टेक्नोलॉजी में एक टाइम पहले when we used to put रुमाल, so now put your रुमाल and activate your rumal. I think just putting rumal forever and then assuming that seat will not be taken is not acceptable. And that will give you the segue towards innovation. So I think innovation, it's not that it's very, very far away, but clearly it's the jurisdiction has made it amenable for manufacturers to sit on the drawing board and start thinking, okay, now we've established, now we have this much investments, we have this much commitments, okay, next, what is the next leg? So I think before you learn to walk, only Michael Jackson can dance, not manufacturers.
Fantastic. And I like your skepticism because that is important. It's not good to just rest on past laurels. The moment you apply skepticism, I think you do better. So I appreciate your point of view on that. Coming to you, Niutpol, you've launched a slightly unique product, right?
Correct.
It's either into mutual funds, but it's a mix of multiple funds.
It's a bouquet of funds,
It's a bouquet
yes.
of funds.
We like to call it that way.
Can you go through that?
Sure. So that was the first fund which we had launched in GIFT City. It's an inbound fund. It's an open-ended fund. The concept of the fund is very simple. Basically, to give NRIs and foreign nationals exposure to Indian markets, especially in mutual funds, right? So that was the basic concept, and we try to make a little unique as compared to what is there in the competition. So what we have done is we have created a feeder fund, which is basically a fund of fund, and underlying, instead of feeding into one vehicle, what we have done, we have bifurcated the funds into two parts. One is to give investors about the exposure to market caps, a large cap fund, a mid cap fund, and a small cap fund. And also we have tried to give some thematic exposure to the investors in terms of certain themes. So we have two thematic funds at this point in time in that particular portfolio. One is manufacturing and consumption, the other one. And we believe these 5 funds gives a diversification to the investors' portfolio. Now, all the funds which are launched in GIFT City are mostly restricted schemes and category 3 AIF, right? So, and the minimum investment is $150,000, right? That's a sum of money for some investors is too much for a new jurisdiction, right? So that's why we have tried to, give them an exposure across different funds so that with one single ticket investment, they get exposure to 5 different funds without having to put a separate amount of money for each funds. That is the first part. The second part is also when you have a bouquet of funds, or basically different funds, you get the benefit of rebalancing at times when markets are volatile. Like at times like today when markets are volatile. In fact, since the time we have launched the fund in July, the market has been volatile. And you get the leeway to allocate your funds accordingly across various funds. You are not tied up only to those 5 funds, right? So if you want, some other theme which might do well in future, we might take an exposure in that particular portfolio. So that's the flexibility which you have when you invest, in a fund which has multiple underlying funds rather than one single fund. So this is one unique offering which we have presented to investors, and the reception has been very positive, especially from NRIs, from UAE and Singapore, all the Middle Eastern countries mostly, because the benefits of investing through GIFts, I think most have already been spoken. But if you come from these jurisdictions, essentially you pay zero tax end to end, because you don't have capital gain tax in the home country, and in GIFT, because it's a specified scheme, you don't pay any tax, right? So it becomes an end-to-end, tax-free product for them. So 70% of our money today is from that, jurisdiction, and we have onboarded more than 100 investors today, collected around 30 million in that fund in just short period of time. So very positive from all the investors about this fund.
And you have an outbound fund as well.
Yeah, yeah.
What's the thesis behind that? In
Yeah.
times like these?
Sure. So that was the first fund was obviously directed to NRIs and foreign nationals. The second fund we wanted to give Indian investors an exposure to global markets. Today, if you see, the mutual fund limits are already hit, right? There are not many options by which a domestic investor can take exposure in global markets. So we realize that GIFT is a wonderful jurisdiction by which we can take global exposures to the Indian residents, and that's what prompted us to launch this fund. And this obviously will happen through the LRS route. In global markets, what we are trying to do, again, our strategy is very simple. We wanted to take a core allocation in developed markets, and also we wanted to take some exposure in emerging markets like China and Taiwan, because these markets often give good returns at times, but also you have to be very careful about these jurisdictions. So we have some portion allocated to that particular segment. And more importantly, we are also trying to give exposure to certain themes which are not available today in the domestic market. So say, for example, be it artificial intelligence or semiconductors or, defense tech or a blockchain. So these type of themes are currently not available in the domestic Indian mutual fund. There are companies which have recently started, right? For us to evolve that ecosystem will take some time, at least 3 to 4 years minimum, right? So today, these technologies are accepted globally, and Indian investors can take benefit of getting an exposure to these type of themes. So that's what prompted us to, create a, fund which essentially gives them a holistic, global exposure through this fund. Now, one, essential question which we find, why, global allocation at this point in time when there is so much of tariff, volatility going on. The way we put it, put the fund forward is that, it helps you in terms of diversification, definitely. But if you see, markets are always uncertain, and it's always inherently volatile, right? In the last 5 years, if you see, where we were in 2020 and where we are today, markets have moved more than 15%. There are fund managers who have given more than 20-25% return, right? Now, why this 5 years? Because in this 5 years, there are so many events that have happened, which are quite huge. One of them being the COVID-19, which was like a lot of people were saying the world will come to an end, right? But where you are, like here we are. Then we had the Russia-Ukraine war. Then we had inflation in oil prices. Then we have various elections, be it the US elections or the Indian elections. So these are very big events, but still market have managed to give you good returns. So our philosophy is, if you take good exposure in a good portfolio and you remain invested in the market for a long term, the market rewards you accordingly. So that's our philosophy. The second one, I'll say that in terms of investment, we have tried to stagger our investment through drawdown mode. So we don't take the money at one go at this point in time when markets are still uncertain. We still have time to allocate our money over a period of 12 to 15 months when we call for the drawdown money. So that's how we want to manage the volatility part, take advantage of market dips and reduce our cost, and give a better exposure to investors.
Oh, great, thanks for sharing that in great level of detail.
Thank you.
And I think just talking of outbound funds, of course there is no specific tax code for outbound funds today via GIFT City, but there is a lot of demand. We've seen many asset managers launch outbound funds because Indians today obviously want to broad base their portfolio beyond just rupee exposure. So that tends to be a significant part of what we do. advising fund managers on outbound products. So that sort of makes sense. Clarence, coming to you, again, in your work with clients, particular thing around LP behavior, in documentation, that you want to share, or any different, work that you may have done, and related question to that is, carried interest is a significant part of, a private equity fund's existence, if I can say that. So, how do you view GIFT City, in terms of possibilities around carried interest structuring? Is it better in any way? Is it neutral? Some thoughts on that?
Yeah, thanks for that. See, I think we've all seen sort of the limitations that are now coming on domestic AIFs around sharing of carry with non-sponsor, non-manager parties, and of course that creates problems.
Can I ask you one question there? Do you think SEBI will?
Hopefully, hopefully. I think there are enough participants pushing for that to happen. It's it, it's it is it's a complicated question, I guess, to some extent, because you obviously don't want too much of sharing. You do want really the people who are the ones driving the investment to share in the upside, as opposed to potentially an anchor investor sharing in it. And I think that's where the difference arises between funds that have very large institutional investors, where the level of sophistication is such that they can fully assess what it means to be sharing carry with as a large institution with some other institution that's backing the fund, or also participating in a distribution waterfall that may not be entirely pro rata, or there may be preference on top up to a certain point between investors as well, right? Now, in domestic AIFs, also given the threshold for investment, and given in many ways widespread participation of individual investors in the space, especially if you look at angel funds, right? You now there is a risk that they don't fully understand what it means to start sharing carry with somebody who's not the sponsor or the manager, which is probably the driving reason for this. But I think if you look at GIFT, and of course, given its inherent limitation on who can invest, it automatically means it's sophisticated investors for the most part. It does give you that flexibility both around carry sharing and distribution percentages. And I think that's one of the reasons as well why, if you look at carry structures, sharing of carry both with potentially anchor investors and potentially domestic employee vehicles, just set up separately in order for them to be able to get carry in an efficient way, which is again not possible very, very efficiently in the AIF structure, keeping tax considerations in mind. I think that is again one of the reasons why GIFT offers you the kind of flexibility that's demanded by sophisticated overseas investors and sophisticated domestic fund managers, and we are seeing demands for that. And I think finally the bit about differential rights and side letters, right? Very common problem with funds where LPs have their own side letters and they expect you to sign up to them, and they obviously don't want those side letters to be made public or the terms to be made public, or even in an abridged format. Whereas with the AIF structure, yes, you do have to disclose vast number of them because of the regulation. Whereas in GIFT you have flexibility there as well. So that does drive LPs to say that, well, doing this within a GIFT structure makes more sense, because we can get our MFNs, we can get our protections, our investor rights, our exclusions, and so on in a more efficient way than we would if you were directly investing in an AIF. But again, this is an outcome of dynamic regulation, right? We never know where the regulation is headed, but as of right now, the GIFT regulations do give you that flexibility.
Fantastic. Thanks for sharing that practical perspective. Coming to Pavan, of course, so much has happened in GIFT City, over the last 3 years on the fund management side. My question is, what can we expect next? And there is a lot of anticipation, around the VCC, around holding company regime, around co-investment and the flexibility around that. So, anything in terms of what we should expect and by when? I don't want to put you on the spot, but
Sure. So let me start with, as I mentioned previously, retail scheme is something which we will see a lot more this year. A lot of things have been cleared for it. Even the 100% NRI OCI, as in it's fit for retail schemes actually. 35 million diaspora, $120 billion of remittances into India year after year. So that is something which we will see this year. Separately, on the policy front, VCC as a structure has been already announced by the Honorable Finance Minister. We have had several rounds of discussion with Government of India. As we speak, we have given our comments on the draft law. In fact, we also ensured that there is enough public consultation. So you would remember we had invited some of you also for that conversation with Government of India, where your feedback is also taken into account. So we will be expecting the draft law to be placed before the Parliament anytime now, at least between IFSCA and Government of India. It has been discussed threadbare. As far as SPV structures, we are pretty close to actually concluding our thoughts. Probably very shortly you will see a circular enabling SPV structures for co-investments and leverage. As far as probably some other areas, maybe passporting, where we can have reciprocity with certain jurisdictions. It is something, some of these areas are essentially, if you look at those areas, which are not clearly only within the purview of IFSCA, or may not be even remotely within the purview of IFSCA. Still, for the industry, we have been trying to work with different authorities. So, passporting is definitely an area where IFSCA, along with some of the foreign jurisdictions, and sometimes this will also involve the Government of India and the government of the other country as well. But definitely those conversations with some of the Gulf region, some of the European countries, those conversations are on. Hopefully we will see something there as well. Anything else? There is a wish list which I missed. Probably.
I can ask my fellow panelists if there's anything
Lakshmi
that
mentioned about creating still more awareness. In fact, we do appreciate that thought process. One good thing which all of you had also appreciated was, at least now when there is a conversation, you need not tell anything about GIFT. People by and large know about GIFT. In fact, our journey has been very similar. 3 years back, we realized we need to create more awareness. So as a regulator, we also started going for roadshows, taking industry along and creating more awareness. We have been doing it for 3 years now and probably will continue to do so. Even our journey has been very similar. First time when we went to US, what is GIFT? We started with 2008. Now we are directly talking business as in what more can be done. In fact, some of it has also been pleasing to our ears. We have seen, as in ADIA is a classic case where they were first LPs in some of the funds and then they set up their own fund. We have come across certain conversations by the asset managers where, in fact, they were contemplating structures in some other countries, whereas some of their larger LPs told them, why are you not considering GIFT? And they pushed them to GIFT as well. So some of those conversations are actually now taking place as well. But yes, of course, we need to create more awareness with a wider set of audience as well, which we will continue to do so.
Oh, fantastic, Pavan. Thanks for that. I think all of these things are, highly important, whether it's the VCC, because inherently, clients have sometimes issues around, a trust structure and, creating multiple sleeves within the sub-trust, within the trust. But, VCC gives a legal framework in terms of, isolating the assets and liabilities or ring fencing them. So obviously, the VCC is important. Mauritius has done it, Singapore has done it. Most other jurisdictions have it in different forms. So it'll be great, for India to have their own version of the VCC. I think that will take, things to the next level. And then passporting, again, very important. These passporting conversation is something that, has become, very hot topic. Of course, earlier funds were set up in different jurisdictions, so it wasn't, that critical. But now with so much of GIFT set up, how do you sell these funds? That's a question which is on top of the mind. And I know it's a long journey, but if some agreements can be inked, then I think that will be super for the industry. And I think to your point on, the last point that you made on LPs sometimes pushing for a GIFT structure, I've seen that happen in my experience. Because what happens is that from a taxation standpoint, let's say if you come into a Singapore fund as a foreign LP, the Singapore fund is a blocker, and therefore if there is any tax, then the tax gets trapped at the Singapore entity level. It does not flow through to the investor. It of course depends on where the investor is, but it often gets trapped. Whereas if you set up a category 2 AIF in GIFT City, the income flows through and the tax also flows through. So, it could mean a lot to some investors. If they are sovereign funds who are exempt from tax in India, then they can take the advantage of the pass-through and suffer no tax. Or if you are a US investor and you're paying tax in your home country, then you can say, I'll take the credit of this tax. So either which way, it becomes an important differentiator for them to have a gift fund. And I have seen this situation play out where the LP has told the manager that in your next fund you please set it up in GIFT City. So completely resonate with that, Pavan. I think we are running out of time, but very quickly, my last question to all the participants, if you have one suggestion to make on any improvements, ease of doing business, what would you like to see better? And if you were to be on this panel 3 years from now, how would you visualize GIFT City? A little bit of crystal ball gazing. Maybe Mitul, start with you.
So I think from our perspective, the VCC is top of the mind today. A lot of our investors expect that, because for our fund, which is pre-Series A, Series A sorts, we can back companies to maybe 2 rounds, 3 rounds. And then beyond that, even if the company is great, you can't really take benefit of that. So a lot of LPs then come into picture because they have the money to do it. So that becomes important. If something of that sort can work out, definitely one of the top things for us. The other thing that we are trying to also evaluate is redomicile some of our Mauritius funds. So the budget has given a extension for that. So I think there again, maybe a little bit of processes because we are yet to get there. So I don't know what the challenges would be, but the regulator has been kind enough to always entertain any question that we have. So maybe just continuing a little bit of that as these new concepts keep coming, that will just help things move faster, I think.
So it might be slightly controversial, but I still want to make this point that, Singapore versus, and I'm using Singapore because Singapore is the most established and trustworthy jurisdiction. GIFT has the potential to be Singapore. And I'm not talking about Mauritius, I'm not talking about Cayman. But there is still that small iota of doubt in the mind of the foreign investor that what will happen to GIFT 5 years down the line. But Singapore, nobody asks those questions. So that bridge between good to great, I think, is what we need to traverse as GIFT regulators. So I think it's very important to have very high levels of transparency. I think that is the biggest ask. Have a charter of, this is what we stand for, this is what we want to get to. And I think having those open communications with the prospective institution investors, which are very, very large, and they have so much of pools of capital to be deployed into the country. And if we are able to give that kind of comfort and confidence to them, then I think it is Sone Pe Suhaga.
Fantastic.
Okay, so I have a very limited one, which is I would like to see greater abilities for Indian individuals to invest into gift funds. I think the existing regime where you impose the LRS limits, I think that's unnecessarily prohibitive for a center that we are trying to promote. And I think doing away with that would probably be on my wish list for sure.
That is not only GIFT, it's general.
Let's start somewhere.
Thank you, Clarence. I think that will help my outbound fund. But I think one thing when we onboard investors, which you have already touched, we wanted to see more ease of onboarding. That is one ask. The other one, I think, which we have seen is already resolved today. Initially, when we onboarded a lot of investors, we faced a lot of challenges with the banking system, where investors' money get deposited in the Indian bank account of the bank rather than the GIFT City. I think that has resolved, and thanks to the regulator, I think they have met all the banking officials, and that we have done. So the next part is the ease of onboarding, which we will definitely ask. And second is in terms of the journey where we are. In fact, in the next 3 years, what we can see is that there will be a lot of funds that will be launched from GIFT City. In fact, as a fund house, Mirae as a fund house, it's not only the Indian management, it is the Korean management also who are very much focused on GIFT City. So we have a strong pipeline of funds which we are working on. And as Pavan ji said, retail funds, that is one of the funds which we are working and we are in the middle of it. We will be launching very soon, and there is an active fund which we are coming up with. So we will see a lot of funds, I think, in the next 1 year or next 3 years, if you see, a lot more than what we have today. Thank you.
Thank you. If I were to ask Pavan, what is your ask of the industry?
Thank you for asking. We have in any case noted all your suggestions. But definitely we also have, yes, and asked from the industry as well, especially those who have already set up and doing business in GIFT. See, one thing which we have noticed across all regulated entities in GIFT, not just as part of fund management business, but across banking, across different professional service providers, across insurance, the ones who are actually growing at a very fast pace while complying with the regulations across jurisdictions have been those who have substance on ground. Some of it we would expect all of you to take it up on your own. It is for your own good at the end of the day. See, don't push the regulators to start pushing more and more requirements on substance. We understand there are difficulties during initial time. We have been very, as in cognizant of the fact, and have been very liberal about it as well. Slowly and steadily we have started our supervisions. We do undertake surprise visits as well, and we are actually on the other side. Yes, we have seen some of the funds who have over a period of time now employed 8, 10, 12 people as well. In fact, same way there are other entities who have employed 20, 30, 40 people. Those who are actually growing in scale and size are those who have the right set of people, even GIFT as well. So while we continue to hear you and make all those changes within what it is there,
Sure.
what government can do, we are still working with different regulators, Government of India, outside participants as well. We would also expect the industry to have more substance on ground, to have right set of resources on ground. There will be challenges. You need to find a way. Thank you.
Thank you. I think maybe we'll have
Thank you so much.
Yeah.
Yes.
a couple of questions.
So actually we are short in
Oh.
time. So, hello. Yeah, so we are in short in times. You can ask your question in tea breaks, which will be in 5 minutes. So thank you so much, experts, for this insightful discussion. Each speaker contributes so well. Thank you so much. Please round of applause for our speakers. Now I request our DG, Mr. Khosla, to please present mementos to our speakers as a token of appreciation.
The lady first.
Yes, of course. Please round of applause.
Thank you.
Thank you for your time. Tejas.
Please take back for a group photo.
Come.
Let's take my stuff.
For the group photo, please.
All right.